The gold price had a great run over the last basically 2 years, and some of the large gold mining companies have caught up quite well, talking about Barrick, Agnico, and so on. But let's say medium tier or mid tier and also the smaller cap companies have not really accelerated as we all have expected, meaning there's a huge gap between the valuation of the big guys and the lower market cap companies. And this is a very good opportunity for us as investors to really have a deep dive on interesting companies, interesting assets, or also interesting management teams to really find out where the next opportunity lays. And today with me is Richard Young. He is the CEO of a company called I-80 Gold, and he basically helped to transform the company into a, let's say, new start or new phase. And I'm really excited for our interview. First of all, Richard, it's great to have you. Thanks for your time.
Well, thank you for having us.
So, Richard, as I said, the gold price has been a strong rally over the past 2 years. And it seems that both investors and also central banks are talking about gold as money again and not just a boring pet rock as they used to. So, let's talk a little bit more general here. What is your view on the current gold market? Is it too hot already? Are too many people talking about gold? Have we gone too far, too fast? Or what's your current view and your outlook for this year?
So by way of background, I'm an accountant, and I've been in the gold mining industry for now over 35 years. I started my career at Barrick. And, I guess my starting point is that all of our family wealth is today 100% invested in gold equities. There's no diversification because I think that's the place to be. I am an economist by background. I think fundamentally there's a number of factors at play that have led to just a significant increase in the price of gold over the past 2 years from a macro standpoint. You know, 2/3 of demand today is coming out of what we refer to as emerging markets. The developed countries led by the US, we're running deficits. Our populations are aging. And even though over the last, well, what is it, 12 to 18 months, 60 or 70 central banks have cut interest rates, the long rate, the 10 to 30 year, have actually gone up. And, that really raises the canary in the coal mine that, we've got some structural issues, long-term inflation. And I think historically, when you look at gold has been a great hedge against inflation. And then you've got the geopolitical events that are going on globally between the US and China and Russia and other players. So while we've seen gold prices move up materially more than I think any of us within the industry would have expected, what is, you know, comforting from my perspective is just how it's traded. Having been in the sector and followed gold for 35 years, it really is trading off a strength. There have been periods where, it's come back, but then it's moved back up again. So I just think it is a different environment with a lot of different global geopolitical issues at play, monetary issues that are going to lead to a stronger gold price for longer. And that's in part why, as a family, we remain 100% in gold. And we talked about valuations. And I know, again, I still believe that the sector is very much undervalued, including the seniors. But to your point, as you move downscale to the mid cap and junior producers, well undervalued versus historic norms. And I think it's going to take time for investors to catch up with the gold price and really the amount of money this sector is going to make, over the next 10, 20 years. It's going to be remarkable. So I think it's still a matter of time, patient, but we as a company are bullish, or at least personally, and then as a company, I think we are very bullish on the gold price. But at the same time, we are ensuring that, we have a balance sheet that runs through a cycle over time.
Richard, I would totally agree. And let's face it here, right? 99% of the producing gold and silver companies have been profitable at a gold price of 2000 and a silver price of $30.
Mhm.
As of today, we're talking about more than $80 in silver and more than 4,500 in gold. And as you said, everyone was expecting a rise in those commodity prices, but not that fast. And the same happens to the mining companies. Obviously, it's not really possible to bring those into the balance sheet, those higher prices, that quick. So we have to wait for some more quarters to really get the money
Mhm.
flowing. And I guess that's the timing where the big guys, the big asset management firms are really seeing the money that's printed at some of the gold producing levels. And then we could probably going to see M&A transaction. And this is going to be an interesting time also for a company like I-80. But let's face a little bit more on the, or stay on the geopolitical side, because the, let's say, label made in the USA has become more of a focus over the last 12 months. And we have seen the US governmental arms investing into, let's say, critical materials and really to boost the mining economy within the US. And you are a pure US play, basically in Nevada, one of the greatest jurisdictions to be in as a mining company. Does it bring any advantage for you, or what do you think about your place in the US? Are you happy as of right now of being there?
Very happy.
Yeah.
Maybe taking a step back, look, mining is global, including gold, but globally mining has gotten more difficult coming out of COVID. And that's because pressure on the mining companies globally. I used to work in West Africa. I still own Endeavor. We sold the company to Endeavor. But, as I talk to some of my peers, it is getting more challenging globally to operate. You can still operate. It's just a little bit more difficult coming out of the pandemic. Then you look at the US and look, having worked globally, Nevada is the best jurisdiction anywhere. The geology and geologists would probably shudder at this, but the disseminated nature of the gold deposits makes it easier to identify and drill out and lower risk on the one hand. On the other hand, you also have a highly skilled workforce that's available. That's not true everywhere globally. And now to your point, the third element, and historically mining in Nevada, particularly under a Republican government, has been very favorable. But to your point, under this precedent, it's become even more urgent. And so, we really, as we look to re-permit our existing or historic operations, we really have the wind at our back with a strong gold price and both federal and state governments that are very supportive to see mining projects move forward. Maybe unlike any period, in U.S. history post World.
Wow. That sounds very good. And let's talk a little bit more about your project. You have not just one, you have five advanced gold projects in Nevada. Can you, A, give us an overview about the assets so we get an idea of everything works together, and B, basically explain us how like five different pieces of puzzle can fit together as one company. So is there any plan on the long-term growth to really bring five assets to one successful mining operation, basically? Give us an idea of those assets and the overview, please.
So actually, we have six gold projects
Mhm.
on four properties. Five of them are included in this current development plan.
Mhm.
Fall of 2024, we're now in 26. We laid out a three-phase development plan that would see production rise from less than 50,000 ounces of gold production per year, which is where we're currently at, to over 600,000 ounces of gold per year at AISC of about 15 or $1,600 an ounce. So again, a very high quality asset base, measured, indicated, inferred gold total 14 million ounces, and we've got over 200 million ounces of silver among the three categories. In addition to that, we believe that these historic mining operations, where the reserves may have been calculated at $800 to $1,000 gold, as gold prices have risen, there are opportunities to increase the size of these deposits. So we've got an exceptionally large resource base. It's either the third or the fourth largest resource base by any company in Nevada. And, they're all brownfield sites, which means they are historic mining operations that have already operated and been permitted. So re-permitting is much easier than for a grass fields opportunity. So, we've got a lot of infrastructure already in place. We've got the people and we've laid out the plan. And we're currently in the process of recapitalizing our balance sheet to allow us to execute on this three-phase development plan over the next 5 or 6 years.
That sounds very good. And as you already outlined, it's going to be a 3 phases or 3-step development plan. And the goal is, and we really have to outline it here, to grow up to a 600,000 ounce producing company a year, which is a lot, obviously, coming from where you're at as of right now. Can you tell me or the audience what are the most important steps or the most important hurdles that you could face, and what progress have you already made? So what are the milestone news, to rephrase my question, for the investors to look at i-80 Gold?
So I think there's two key items for investors to look at and to be aware of. So fundamental to phase one of our development plan is the refurbishment of our existing autoclave and process facility in northern Nevada. So we are one of two mining companies in Nevada with autoclaves permitted and operating. And an autoclave is required. So, in Nevada, there are essentially two types of material: oxide, which can run through a heap leach pad to process that, or a standard mill that you would see anywhere in the world. But in Nevada, you have refractory material that you need to do what nature did over millions of years. And so you want to cook it. And so there's only two permitted companies with permitted autoclaves. We're one of them. So we're going to refurbish our existing autoclave circuit and modernize it. It had historically operated for about 15 years. And we're going to spend about $430 million, including capital spares, to do that. And the board's already approved the limited notice to proceed that has allowed us to order the long lead equipment, as well as commence the re-permitting process. And once we complete the recapitalization, we're targeting that here in the first quarter, the board will approve notice to proceed to complete that refurbishment by the end of 2027. So in parallel, we're ramping up our first underground mine. We've started construction of our second high-grade underground mine. And by the end of 2027, both of those operations will be ramped up. And we would expect, once the refurbishment is complete, to be producing about 200,000 ounces of gold per year, generating EBITDA somewhere between $200 and $400 million per year, depending on gold price. So that's phase one. Phase two is bringing our third high-grade underground mine into production, as well as our first oxide open pit. And phase three is our flagship Mineral Point project, which is the largest project within our portfolio, and will produce roughly about 300,000 ounces of gold equivalent production once that is constructed in the early 2030s. So, if you go to our website, you look at our presentation, it's very clear those three steps, they all work together. For those five projects are not capital intensive because, there are historic mining operations that we're restarting, and there's already a lot of capital and infrastructure that's been put in place. So the IRRs of these projects and the technical complications are low with the execution plan. So we're in a great spot to be able to execute and build a mid-tier gold producer in Nevada.
Yeah, and it sounds like you can achieve it quite easily compared to others that are trying to chase the same plan, especially with the autoclave facility, as you already outlined. So we talked about the upside, and everything to me looks pretty good and pretty straightforward. I also like that we have an experienced management team. You, as the CEO, you A, have the background, and B, already have proven that you are able to turn around the company because you already started working on it, and it turned out to be quite good for the existing shareholders. But what do you see could be a risk for the company? I mean, obviously the gold price and obviously politics, but on the operational side, what could be the biggest risk, and how do you think you can overcome it?
So historically, when you look at mining projects, um, when you're building new projects and they either are over budget or they don't operate as designed, it's really a lack of engineering.
Hmm.
So our group has built a number of mines, and so y- you know before you get started, and the great thing about coming into I-80 is we're in at the ground level. So, for example, the refurbishment of the autoclave. Hatch Engineering has done the study. We've spent $15 million on all the engineering work. It is well advanced. They actually built this autoclave circuit back in the early 90s, so they know it. They've put their A team on it, and we've been able, because it's Nevada, we've got people that worked, at this facility, and we've got an owner's team that will help construct that have built autoclaves and roasters in Nevada over the last 20, 25 years. So we've got the people, they've done the proper engineering, we've got a very solid execution plan. And so, we're comfortable that we can execute on that. And that's the same with every area of the company. So one of the things when, I first joined, the PAs were done by different groups and good groups, smaller boutique engineering firms. One of the things that we've done is we've transitioned that work to the big bulge bracket firms that really specialize in this, household names. We've done the gap analysis, and there have been areas that we've identified that needed additional work before you complete the feasibility study. So I think fundamentally, you've got to do the work, and complete a proper feasibility study that we refer to as bankable. It's a bit of a nebulous, sort of concept, but it's got to be that high standard with the proper engineering firms doing that work. And then you've got to properly staff it. And you've got to be realistic about, what needs to take place and make sure that you got realistic timelines. And you've got the balance sheet to be able to execute. So while there's a lot of work to be done to be able to move through this three-phase development plan, nothing's challenging. It's more of a volume of work.
Mm.
It's really project management. There's nothing technically challenging because we're just restarting mines that have already operated and there's already infrastructure in place. So we don't see the execution risk as high as long as we do the proper feasibility studies, and we're doing that and make sure that we've got the right owners, team, and oversight to be able to execute.
That sounds very good, Richard. Thank you very much for outlining that. Let's come to my last question, and I always like to ask that one to the CEOs. So let's say a private investor who is not so very familiar with mining, but he wants to go into the mining, would ask you today, what is the main reason or the three main reasons to invest? Why should he invest as of today? What would you tell him in easy words, and what are your three main reasons?
I'm going to be attending a conference in Wisconsin for generalists. And so the one thing that I would say about mining is that, you know, when we put these feasibility studies out, you know, we basically have a plan to be able to operate for 10, 15, 20 years. And if the proper work's been done, you know, it's pretty certain in terms of what the business plan is and how to execute. And at these metal prices, the sector makes so much money. And the other aspect we haven't spoken about is 15 years ago, gold prices ran from call it 1,000 to $1,900, but you didn't end up seeing, the margin expansion because there was just this global inflationary period where oil prices went from $60 to 150 a barrel. Well, we're not seeing that inflation today. So what we are seeing as an industry is that we're capturing roughly 95% of the higher gold price that we're seeing. The 5% we're not capturing is really tied to royalties that are tied to the metal prices. So when you look at ourselves or the sector, these are largely locked in business plans, and you can, make your own assumption on metal prices, but the sector is going to make a lot of money. And you compare that to buying Meta or buying Apple. The multiples for those companies are three, four, five, six times what they are for the senior golds. Yet those companies have to reinvest, their business plan every 3 years. So, how certain are those cash flows that they're currently generating? Whereas in the mining sector, there's so much more certainty, there's lower risk. So when you look at a risk adjusted basis, I believe this sector is going to be an outperformer for the foreseeable future. Despite the fact that gold prices have moved up materially, it still is 10, 15 years to bring new projects on, generally speaking, from discovery. So, and the world's more challenging than it was 30 years ago to explore. So I don't see a lot of new supply coming in. There will be some recycling supply as metal prices move up, but you've got such strong demand, as you mentioned, from central banks, from investors concerned about some of the structural changes that may be taking place in the US dollar that, are frankly haven't occurred in 80 years. Like it's a really significant movement that is underway. So, and that's why our family is fully invested in gold equities because, to be honest, I can't identify, you know, a better place to put our money. If you put it in cash, with inflation, that's going to be worth less in a year
Yeah.
than it is today. And, with some of these large cap tech companies, what is AI going to do? They're spending a lot of money. They're now taking on debt to do that. And as we've seen in other situations where something new like AI has been great, like the railways in the US back in the 1860s. But even though it was wonderful for mankind, shareholders didn't benefit the way they had expected. So, look, I believe in the sector. I think the gold mining companies are better run today than they ever have before. And, we're not facing inflationary pressures on the cost side. And I think it's going to be a golden period for gold companies for the foreseeable future.
Richard, I think that was a very good ending for this video. Thank you very much for outlining. There was a lot of knowledge in this video, a lot of explanation for i-80 Gold, and I really appreciate it. And for all the investors, this is not an investment advice. The show is just to give you all the information you need to do your due diligence. You're going to have the website of i-80 linked below. Do your due diligence, do your work, pass your questions to Richard. And Richard, thank you very much for your time. It was a very good interview. Thanks.
Thank you for your time.